Good morning. It's Monday, May 12th. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So the Sunday night trading action into the early Monday morning hours are the reason why you really want to have a futures trading account. You can see trade talks dominated the headlines in the markets overnight. The U.S. and China will temporarily lower tariffs on each other's products, and the U.S. is reducing its levies from 145% to 30%. And China is reducing its duties from 125% down to 10%. Notice that China left a 10% levy on U.S. products here, and it because of the fact that you're gonna need to see China maintain a firm stance in these tariff negotiations. Now, the tariff reductions will give the countries about 3 months to reach a more broader agreement. The agreement is seen as a significant de-escalation in trade tensions, with U.S. equity markets, oil prices, agricultural products, and treasury yields all rising. It's the clarity in the details, which came out a bit later, is what sparked this second wave of a rally in U.S. equities overnight, and the second leg lower in the precious metals markets in the overnight session. So looking at the S&P 500 trading last 58.50, that's up 172 points or a 3% move higher. We broke above that pocket resistance, which was 5,700 on up to 57.50. Now we're testing a more significant resistance point at the 5,900. What could help this rally continue to grow from here on U.S. equities? Well, it's really going to take two things. It's going to take a more dovish Federal Reserve, and it's also going to take 10-year Treasury yields pulling back here below even key levels like the 4%. You look at 10-year Treasury yields at 4.45%. So that could be one of the next thing that Trump really starts to apply pressure to the Federal Reserve again to make that interest rate cut at one of the next meetings, because of the fact that they've been on this wait and see on how these tariffs impact the economy and the U.S. economy, and now we've got much more clarity. So we're going to see less waiting from the Fed and more action from the Fed going forward. Now you look at the precious metals markets, and specifically the gold market, down just under 4%, 32.15 last. Big sell-off here, about $128. Now, if you look at the gold market, we rallied from about $29.85 in early April on up to the all-time highs at $35.0990. When we saw some of the discussion about the possibility of trade talks here, prices had sold off, retested 3,200, then a re-escalation where prices go back up to 34.50. Now prices have come back down to that support level from 3,200 to about 32.15, and that's where we're trading at last. The silver market is getting a bit of selling as a rotation occurs to the late to the party buyers in that particular market. If you've been working closely with us, we have been more focused on other industrial metals, specifically the copper market, also looking at some of the agricultural products and some of the energy products, which could really benefit from this de-escalation in the trade war with China. So we're seeing the dollar index. That's another thing that we discussed, and you can review that on Friday's video, where I said that there's a 95% inverse correlation between the dollar index and the gold market. Well, gold futures here under this pressure because the dollar index up about 1.5%, trading at 101.68, so breaking back through that 100 level. You're seeing the euro currency start to break down. I mentioned that on the chart here, that we were starting to sell off. We're also seeing some of the safe haven currencies such as the Japanese yen down about 2% and the Swiss franc nearly down 2% as well. Now looking at some of the ETF flows, when you come into Friday, the exchange traded funds, they only added about 6,000 ounces of gold to their holdings. So it seemed like anybody on Thursday really started to reduce their positioning into the gold market because of the fact that these discussions were going to happen over the weekend. And it was really under the impression that President Trump did not want to disappoint specifically the American public. So the ETFs added about 539,000 troy ounces of silver to their holdings in the previous session. So you can see the rotation is beginning to occur out of gold and into industrial metals, into other broad-based commodities. So you look at last week's changes, ETFs reduced their holdings by 121,000 troy ounces of gold. They reduced their holdings on silver by 184,000. And what did they do? They increased their holdings in platinum, and then they also reduced a bit on palladium. Palladium has gotten no love recently as far as ETF flows. You look at the year-to-date percentage change, gold up 7.2%, silver up 2.3%. We look at the gold-silver ratio here, right at about 100 to 1. If you go back to Friday, it was about 101. You go to the overnight session, we got down to about 98 to 1. And then we're going to want to continue to watch 97 to 1 as that April 23rd low for signs of a rotation more out of safe haven assets and into industrial metals. So we're seeing oil and other commodities rise after that US and China, this trade talk and some of these agreements reached over the weekend. So we look at other things like copper futures up about a penny at 466 after hitting 472. We look at the soybean market up 17 cents at 1069. And we look at crude oil futures up about 3.5% at 63.20. So this has been some of the markets that have been on my radar. Now, some things to watch here this week. We do have a USDA report coming out. We've got quite a bit of economic data here with CPI, PPI, retail sales, and they're going to provide some clues here as far as the impact of the tariffs on inflation and on the economy. We're going to continue to monitor here for further trade discussions and announcements from the Trade Administration, and we're going to want to look at some of these key commodities here, which could just be starting their rally from this point with these news headlines coming out. So a couple things we're going to want to monitor that, again, that gold market. We're going to want to see if that critical level of support can hold. We're going to want to see if copper futures can continue to rise, if crude oil futures, how they responded about the $63 to $64 level. Remember, that was old support, now new resistance, and then we'll want to look at some of these other commodities out here that could really benefit as well. If you guys got any questions, give us a call or shoot an email to info@bluelinefutures.com. Remember that futures and option trading does involve risk of loss and may not be suitable to all investors. Good luck, good trading.